Good day, traders, and welcome back to another weekly dose of market insights with me, Zain, Vawda, your analyst here at OPT. Now, obviously, quite a bit to unpack. 7 days is quite a long time in terms of markets, as we've seen over the last week. I think we're going to look at a quick recap of last week. We will cover through major events for this week by looking at the economic calendar as well. And beyond that, also, we will take a quick look at the technicals and see what we can find there. Now, just looking at it, guys, like I said, last week was quite a big week in terms of markets. Now, one of the biggest developments, obviously, last week, all eyes were on that US jobs data and jobs report. We know how important that has been of late. Now, quite surprisingly, we had a massive blowout on that jobs report there, coming in significantly higher than expected. Markets not expecting the print of around 250,000. We also had some upward revisions over the last couple of months there with the jobs data as well. So all in all, quite a significantly positive, report there from the US economy. We also saw unemployment tick down to 4.1% from the previous 4.2% print. And we saw a slight uptick in wages and wage growth as well. Now, the wage growth side there might be a little bit concerning, guys, particularly in regards to inflationary pressure moving forward. And it is something that maybe the Fed will keep an eye on. Now, having said that, obviously, we saw quite a significant change in expectations there from the US Federal Reserve. If I may quickly just pull something up here, guys. A week ago, markets were debating between a 50 basis point cut, obviously, from the Fed in November versus a 25 basis point cut. Now, what we have seen since the data release on Friday, that 50 basis point cut now has been completely ruled out, guys. This is the CME Group Fed Watch tool, guys, if you can see here. Now, obviously, as you guys can see, at the moment, we actually have a 14% chance that the Fed will not actually cut rates at all, versus an 86.1% chance for a 25 basis point cut. Now, just looking back at a week ago, guys, a week ago, markets were pricing in a 34% chance that we actually get a 50 basis point cut and a 65% chance that we actually get a 25 basis point cut. So as you can see, we've had quite a significant change of expectations over the last week, and most of that obviously down to their jobs data. We did obviously have some other positives last week with US data in general remaining relatively strong, showing signs of a positive economy. So we did see some news there around the PMIs, where we did see a bit of concern around factory orders and so on for the US. However, all in all, it does look like the US economy is thriving at the moment. So a positive there. And obviously, this has now led to this repricing here that we are seeing from the Federal Reserve. This is obviously bled over into markets with the US dollar, obviously experiencing quite a renaissance last week. Now, that is something we will look at shortly, guys. But before we obviously get into that and the changes we have seen in markets, I think the next thing to take a look at, guys, if we can, would be just going back to that economic calendar, if I may, for a second. For this week, guys, obviously the major events that we will be focused on, I think on a global markets perspective, I think keep an eye on that US inflation number. And like I mentioned, guys, there is some concern around a potential uptick in inflation. Now, I know at the moment we are seeing quite a significant rally in oil prices, which, could impact inflation, but I think that impact might come further down the line. As for now, today's inflation print, I don't expect us to see any significant change there due to oil prices. We might see other price pressures obviously coming in. As I mentioned, US wage growth is still strong as well. With unemployment coming down, could we see a slight uptick in inflation there from a demand side perspective? There is that to keep an eye on. That obviously could then lead to some US dollar strength or continuation of US dollar strength, which we saw last week. So as I mentioned, the core inflation numbers and US inflation rate on Thursday, really key. Heading into that, guys, we do have FOMC minutes on Wednesday. Now, the minutes could be important. However, like I said, I think this jobs data from last week now has actually shifted what the Fed would have been discussing at its September meeting. That's the minutes that will be released this week, Wednesday. So I don't know if markets will actually take a lot of cues from the FOMC meeting this week. I actually think looking at, Federal Reserve speakers and policymakers this week might actually be, more important in terms of what the Fed might do moving forward. So just bear that in mind, that FOMC minutes might not provide the real, what traders were actually hoping for. Looking ahead to Tuesday, guys, now Tuesday, tomorrow, we actually do have a significant development there from China. Now, obviously, China released a stimulus package, obviously, now around 2 weeks ago, guys. We have seen quite a significant rally in Asian markets, particularly the Chinese markets as well. Chinese stocks rallying, some of them to all-time highs as well. And tomorrow, I believe we will get an update there from the National Development and Reform Commission, basically around this entire stimulus package and what it might entail. Now, it's just a quick one there, guys. If we look at what we are seeing in terms of developments out of China this week, you know, we're still seeing, like I said, we did see a continuation of last week's rally for Asian equities. You know, like I said, tomorrow's National Reform Commission will host a briefing on executing incremental economic reforms. Now, there has been some rumors, guys, that we might actually get further, you know, stimulus around the housing sector as well. We did obviously get some of that in the initial stimulus package, but we may still get some more. Now, the one thing to take out of this, guys, is we have seen that you know, Goldman Sachs, for example, have raised Chinese stocks to overweight, with strategists predicting another 15 to 20% upside. However, then we do have, you know, a conflicting view or a different view completely on the opposite end of the spectrum, with JP Morgan and HSBC remaining skeptical about the resurgence. Now, obviously, there has been this back and forth the entire year about China's growth this year and whether they will reach their targets. So just something else to bear in mind there, guys, as we head into the week, and that address tomorrow there by the National Development and Reform Commission in China. So that could obviously have a slight impact on emerging market currencies as well. Now, emerging markets, guys, just touching on that briefly while I switch over to some charts here. Emerging markets last week obviously feeling a bit of strain, guys, and a lot of that, I think, came down to the changes which we obviously saw in what we saw with the global sentiment around the attacks on Israel, and geopolitically, you know, the concerns there that have been raised now from a geopolitical perspective, obviously, around potential retaliation there from Israel as well, and a further wider war in the Middle East. So that seemed to, you know, take a bit of the sting out of the emerging market rally, which we saw from the previous week when we had the China stimulus. And that could continue, obviously, this week, with there's still a lot of uncertainty hanging around a potential response by Israel and what that might entail as well for the region and on a wider geopolitical scale. So obviously geopolitics really featuring heavy this week, guys, and a lot to pay attention to there. But let's get to the charts, guys. Here, obviously, we have the dollar index that I've got up here. And if you guys can take a look here on the dollar index chart, obviously, guys, we had that significant rally last week, all 5 green days last week. You know, one of the strongest rallies we've seen in the dollar index for quite some time. Now, we did mark off last week, or we did discuss in last week's video, that $100 or 100-point psychological level here on the dollar index. We failed to obviously touch into that level before the significant rally to the upside. As you can see, we are at a key area or a key, you know, zone, previous resistance here, and then support, obviously, now back to a resistance area around this 102.60 mark, which could be, you know, crucial here, depending today how the day plays out. Now, on the upside, guys, other levels that could come into play this week, we do have this 100-day and 200-day moving averages further to the upside here. At the 100-day, obviously, around the 103.30 mark, and the 200-day around 103.739. Now, I think a lot of dollar strength this week, guys, is going to rest on that CPI print. Federal Reserve speakers as well could play a key role here, you know, and how that Fed rate expectations continue to get repriced and how they continue to develop. So pay attention to that as well. Looking at some of the other charts here, guys, we can flip through to pound USD as well. Pound USD obviously now seeing quite a significant pullback following those highs which we had most recently around the back end of September the 26th, when we tapped into just above that 1.3400 level. And since then, obviously, you can see the significant drop off, now trading below the 13100 handle. Now, I do have the zone drawn in here that caught my attention, guys. It had been a previous area of support that became an area of resistance and now serving as support again. But today, price is breaking through. This is obviously a daily chart, guys. You can see price is breaking through below this 13100 handle. And at the moment, I do think that, you know, a pullback towards this 130 psychological level is looking more and more likely. However, like I said, it will all depend on how the dollar develops and how dollar strength, you know, plays out this week. On the downside, like I mentioned, that 130 psychological level, always a key level to keep an eye on. And then obviously below that, we do have the, I believe this is the 100-day moving average, guys, around the 129.30, 129.40 mark, which kind of lines up with a, previous swing high and area of support resistance, which I had drawn in on my chart as well. So a key confluence area there just below 130 there, which may come into play later this week. So pay attention to that, guys, obviously as well. Moving on, guys, this is one chart that I really thought might give you guys something to work with this week, or something to pay attention to at least. USD Swiss franc, guys, having consolidated here for the better part of about 6 to 8 weeks. We finally had a bit of a breakout here last week with that dollar strength. Obviously, now this is an interesting one, guys, obviously, because the Swiss franc is obviously a safe haven asset, and with the uncertainty around the geopolitical situation globally, the Swiss franc could, obviously catch a bit of a bid. However, last week, as we saw towards the back end of the week, dollar strength, outshone the demand for safe haven, obviously, or the appeal for safe haven currencies. So at the moment, we have broken this inner trend line, obviously, guys. So that's why I'm paying attention to it, having broken out of the consolidatory price action box that we were in for quite some time. We have obviously now broken above this trend line as well. So, the potential here, what usually with trend lines, a pullback and a continuation, might materialize. Obviously, upside, there is quite a bit of potential here. I mean, support levels or resistance levels to the upside. Obviously, there's the 100-day MA here around 87.50. That's around 200 pips, so 180 pips away from current price. So there is potential here for upside moves on USD Swiss. Like I mentioned, obviously, guys, this will still depend on how that geopolitical situation shakes out over the coming days. Next up, guys, we have USD yen. Obviously, the yen, kind of a similar situation with the Swiss franc, the yen safe haven appeal being tested. And obviously with the yen, we do have a few other factors also factoring in, guys, like the incoming prime minister there in Japan, the snap elections as well, and obviously Japanese monetary policy as well, how the central bank is looking to proceed over the coming weeks will also play a factor here. But at the moment here, the most critical key level on the upside we have is 150. And above that, guys, between the 150 and 151 level, we do have quite a bit of, hurdles for, bulls to get through if we are to continue this rally to the upside. So 150 to 151 looks like a very key area, or confluence area, if you will. We do have the 100-day, 200-day moving averages. We do have an area, previous area of support that's now resistance, and obviously that psychological 150 whole number there as well. So if the yen, if USD yen is to continue moving higher, like I said, that 150, 151 level might be an area to pay some attention to. Another one, obviously, guys, that looks really interesting is the S&P 500 quickly. And this is something I've been writing about over the last 2 weeks or so. We have had a significant breakout of this massive triangle pattern, which we had been in from, started basically in the middle of July, as you can see here, guys. And having broken out of this, guys, obviously, triangle patterns usually, the way of using them is you would measure the mouth of the triangle pattern. That would be the opening from there to down here. And then you would replicate that as a potential for a target move to the upside. So, just based on that, the potential is there for a 600-point move to the upside, or breakout from here, looking at around 6,100, 6,200 potentially. Now, obviously, being so overbought at the moment, indices, US indices, we do have US elections coming up, which could play a role as well in how markets decide, on their next moves and so on. So as much as I do like the setup, guys, like I say, a 600-point move is quite a big deal. And, we could be in for a pullback before that, obviously, as well. So just pay attention here. There is that potential as well. But like I said, a lot of it hinges on other factors. Gold quickly, guys, and oil will be wrapping it up with those two on the commodity side. And obviously on the gold front, guys, gold continues to hold that high ground. A lot of this is down to safe haven appeal. And like we said, gold last week, even though like some other safe haven currencies faltered, gold continued to hold the high ground right up until Friday. We did have a bit of a pullback on Friday. At the moment, this 25 or 26.40, guys, apologies, support handle here seems to be holding quite firmly. We've had now about 3 tests into that zone there. As you can see up here, 1 test down towards that level. We had one on Wednesday. That would be last week, Wednesday, Thursday, and Friday. We had tapped into that 26.39. Obviously, we did have a spike through there on Friday down towards 26.31. But as you can see, we closed back above on the 4-hour. So the 26.39 level for now, guys, looks to be the floor for now, short-term floor anyway. A break below that could obviously open up further downside, maybe a retest of this 100-day moving average here at around 26.25, which is a confluence area and a previous swing low as well from the back end of September. So something else to pay attention to there. And then lastly, guys, I think the biggest one, what everybody's been looking at recently, has been the significant rally here in oil prices. Now, oil obviously having flirted with, you know, a fresh year-to-date low or close enough there, dipping below the 70 mark here on Brent. Before we did have the significant rally to the upside, a pullback that looked like, you know, the upside rally had been running out of steam. And then eventually we had this massive breakout here. And as you can see, guys, I do have written here divergence in play. Now, this was something I had provided, I think, in an article I wrote, guys, as well. For our divergence setup, we did actually have here on oil prices before that rally started. However, the size of the rally and the speed of the rally really took me by surprise. And obviously, all of that is down to geopolitics in the Middle East, which continues to push oil prices up. We're now trading just above that psychological 80 mark on Brent, and we are testing the 100-day moving average around just above that 80 mark. I think the 100-day moving average around 80 to 70 for now. And above that, guys, resistance or key areas on the upside here, 81.58, and just above that, the 200-day moving average at 81.90. So, like I say, the developments around oil, guys, is really key. If we do get further escalation in geopolitics, or if we do get an attack by Israel on Iran, oil prices could really skyrocket there. There has been rumors about potentially targeting, you know, Iran's oil infrastructure and so on, and that could obviously, you know, send oil prices soaring to new highs. Another thing to consider is, you know, escalation in the Middle East could lead to Iran closing off the Strait of Hormuz, which controls around 20% of the world's oil supplies, and that obviously could add a further premium to oil prices as well. So these are just developments to pay attention to this week, obviously, and we have that US CPI on Friday. Also, lastly, guys, we do have earnings season starting this week. However, none of the major firms will be reporting earnings this week, so not something I will be keeping a very close watch on. I think most of the big earnings releases will come at the end of the month. But otherwise, stay safe, and I will catch you guys back next week for another weekly dose of Markets Insights. Have a good one. Bye.